good morning. Welcome to this edition of our Ag Market Network Weekly Market Report. I'm Pat McClatchy, and this is about the export report that just came out. I have not looked at it yet. We're going to pull it up right now and see where we are. Cotton, 75,100 running bales. That's lighter than we've seen, actually down 72% from the 4-week average. India took 30,400. Vietnam took 25,200. Indonesia took 9,800. Turkey took 8,300. China canceled 5,600 bales, not a real big thing. New crop sales, net sales of 43,000 running bales. Japan took 11,700. Vietnam, wait just a second here. Guatemala took 11,700. Vietnam took 8,500. And then we've got shipments of 360,400. That's up 17% from the previous week. Market is down some, down 21 on the day in July, 66.35. December is down 20 on the day at 65.68. Now that market was down around 12 when the number came out. Next, soybeans. 225,900, down 50% from the previous week and down 44% from the 4-week average. Egypt took 110,000 metric tons. Japan took 87,500 metric tons. Taiwan took 77,900 metric tons. And we do have some cancellations here. Cancellations of 185,000 from unknown destinations. The soybean market before the report was up 4.5. Right now it's up 4 3/4, so no change. Oftentimes markets know what these numbers are going to be, and so that appears to be the case so far in grain. Corn, net sales of 168,500 and down 64% from the 4-week average. Japan took 164,900. So we know we've got cancellations coming in here. Colombia took 94,600. Taiwan took 58,300. Reductions of 184,000 from unknown destinations. Now, corn before the report was up 7. Right now it's up 7 1/4. Next, wheat, net sales of 47,600. Japan took 112,100. Mexico took 75,300. Taiwan took 56,700. We do have cancellations of 189,200. This time of the year just means they're canceling their sales that were old crop and rolling them to new crop, or will be rolling them to new crop. The wheat market was up 2 before the report. Now it's up 3 1/4, so positive response there. Just talk about what's happened here recently, and I'd like to speak specifically for just a minute about the USDA crop report that came out 2 days ago. The market, the talk is among analysts that there are some disagreements over some of these numbers, and as we look at the disagreements, they're primarily over corn and soybeans, and the general feeling is, let's start off with soybeans and say that the analysts generally feel that the soybean numbers that were unchanged from the previous month are not probably accurate. They think that the numbers will eventually mean less soybeans and less carryout. So that's the reason we had a strong reaction yesterday. We had a strong reaction today. It's the general feeling that the weather now is more of a factor for soybeans and ultimate yield, and that those numbers that we came out with are not going to be something that are going to prove to be accurate. Corn is exactly the opposite. The numbers were changed for corn, showing less carryout based upon yield projections, which affects everything else, production and carryout. Well, the analysts feel like that one maybe is a little bit too aggressively cut. And that's why corn has been dragging a little bit behind the pack here. Now that can correct itself for sure, because it's still a weather market. And then as far as cotton goes, no change in cotton, but there is the growing concern over West Texas that the market does not seem to be aware of yet or does not pay attention to yet that could, and that is we have certainly started off with bad stands in West Texas, especially Lubbock to the north and Lubbock really to the northeast and northwest, but in the Lubbock area, and there are just not a lot of good stands anywhere. Just a lot of water, hail damage, late planting. That might correct itself and prove to be a good, prove to be a good crop this year, but there's definitely going to be more corn planted in the place of cotton, with cotton that's failed. And so, what does all this mean? Well, as far as projections go, I think most everybody thinks cotton is going to trade between 64 to 65 on the downside and maybe 69 to the upside in December cotton. It's possible if some of the talk about Texas starts to get into the market and we continue to see poor weather situations or poor stands in cotton, we could see this thing higher than that. I mean, it could even get into the low 70s. But for the most part now and for the near future, it's going to be sideways. It just feels like we're on the low end of sideways. As far as soybeans go, some of the technical ranges there, a low of, and November soybeans right now, before we mention this, it's at 910, a low of 870, a high maybe into the 950 or 960 level. The December corn, the range there, and December corn right now is trading at 452 3/4, a low of 420, a high of 475, or even higher, $5 possibly. If the funds really get behind that market, if they're buying the market, if we continue to see here that we are seeing the damage, and as we get to each Monday, our crop progress reports show the crops deteriorating, then I mean you could get up into those higher levels. So what does it mean for you if you're a farmer? Well, it means you definitely need to be looking at pricing some stuff as we rally. And if you've already priced things, you might even consider buying some calls, because this market does have a chance to move higher. So that's really the comments. One last look at the market. We've got cotton down about 22 to 23 right now. So it's about 10 or 11 lower than it was before the report. We have soybean market is right now up 5. It's about a ½ cent higher than when the report came out. Corn is up 7 1/4, and that is in the area of where we were before the report. Same thing for wheat. Wheat's a little higher. It's up 3. It was up 2. So the market seems to like these reports. So that's it for the day. Thanks for joining us for this edition of our weekly Ag Market Network Market Report. We'll see you later.